All right, guys, I hate to disappoint, but it's me hosting today. Seth's in Tennessee, slacking or doing something. He is in the chat. He's gonna monitor the chat. So he's handling the Everything Money account right now. We've got Tim here. Tim is going to be running Everything Money, like not full time, but he's already running it basically. But he's going to keep doing it and get even more involved. He's running Dynasty Owner right now, dynastyowner.com, our fantasy football startup. It's incredible. So we still have Mo, and we've got Quinn, our intern. He's also Mason's brother. He is now taking credit for the entire channel for some odd reason. He thinks it's successful now because of him. I have no idea how. So a couple of things I want to go over. Yeah, Paul's slaying it already.
He's like, yeah, that's right.
So guys, if you're part of the Patreon, I did a March Madness bracket. 386 people entered. No entry fee. All you do is be a patron. 2,000 for first place, 1,000 for second place, 500 for third place, 250 for fourth place. I am currently ranked 100. Here are the top 10, top 7 essentially right here. So now guys, these guys will all be getting money. If it ended today, first place would be getting 2,000, second place would be getting 1,000, and then these 4 third places would be splitting 750 evenly because third and fourth place is the same one. So they'd be splitting the 500 and 250. But this is pretty awesome. We have a game tonight. Michigan plays tonight. We play 11 seed. I already forget who we play. Who do we play? 11 seed.
Oh, yeah.
UCLA, thank you. Who beat their 2 seed opponent the other day. I always forget who they played. Who they play? 2 seed. Jesus. Either way, we play 11 seed. It's very, very rare for an 11 seed to make the Final Four, so I'm hoping that bodes well for Michigan tonight. But it's pretty awesome. I don't know who Carlos is, but Carlos is picking bad. I actually personally believe that Gonzaga is going to win. I mean, they're incredible. But either way, it's awesome. That's another reason to join the Patreon.
Who's Michigan playing?
Tonight?
Yeah.
UCLA.
Oh, nice.
Were you not here like a minute ago?
I wasn't listening.
Okay, gotcha. So, yeah, we play UCLA tonight. They're 11 seed, but they're playing pretty well, and that's all that matters is how you play in March, right? Okay, so another thing I want to talk about today. I watched a great documentary last night. I didn't watch all of it yet, but I didn't finish it yet. You know what I'm talking about?
One?
Blockbuster.
So it's funny when you said that, I was like, yeah, this is terrible. I didn't even finish it.
Come on.
I thought it was horrible.
Why do you think it was horrible?
It was so boring and weird, and I just wasn't a fan. That's why
what was weird about it?
I don't know. They had weird characters on there, and I didn't like how they put it together. But when you said, you texted me and you were like, I'm watching the Blockbuster documentary, I thought you were going to follow up with, I don't like it.
No, it's awesome. Oh, so you watched it before last night?
Yeah. I watched it last week when it came out or something.
I think it's great. It's what's called The Last Blockbuster or something like that?
Yeah.
So there's one Blockbuster left in the entire world right now. It's in Bend, Oregon. Did you know this? There were 9,000 Blockbusters in 2004. Here's the interesting part about Blockbuster. They were actually rebounding and getting better. Their revenue doubled in 2008. Then the financial crisis occurred, and all financing dried up, and they lost their financing. That's what was the final coffin for them.
What did they say about the number of employees? That's the one that caught my ear.
It was like 9,000 people and 76,000 employees.
And then they came down and they were like, and now we have
4 employees.
Yeah, I was like,
something
damn.
Insane. She goes to Walmart and buys the DVDs. When she goes to for this Blockbuster that still exists. I mean, Blockbusters, they were doing streaming. In 2008, they started doing streaming and mail-in DVDs, just like Netflix.
Yeah.
And they all verified, I thought it was a wives' tale. They all verified that Netflix actually did ask Blockbuster to buy them for $50 million, and they were basically laughed out of the room. And now look at Netflix. So it's interesting because we're talking about FANG stocks today. Facebook, Amazon, Apple, Netflix, and Google. So we're going to talk about Netflix today. But it just goes to show, guys, when we talk about value investing, you to consider Blockbuster sold for $8.4 billion, something like that, in 1994, 1996, and then they went bankrupt just 12 years later. Things can happen. That's why value investing, that's why diversification is important, even in value investing. Who would have thought in 1994 that we would have on our phones the ability to watch movies and TV shows on our phone? I mean,
I remember when, I think it was the iPhone 3G, that was the third iPhone that came out, and Netflix came out with the very first app, and it was horrible, but you could watch something. I thought that was just incredible.
Well, yeah.
And
now with cable, I can watch cable on my phone.
You can do everything on your phone now.
Absolutely.
You don't even need television.
You never know what's going to happen, and that's why you always have that margin of safety, because if you buy 30 stocks like that, you're going to be wrong on 1 or 2 of them, and they might go to zero. I don't know what they're going to go to, but they might go to zero. So you got to be okay with that margin of safety. That's another thing we always press on is margin of safety, because maybe not everybody. What's the average age in this chat, do you think? What's the average age here? Our average viewer is 35 to 45.
That was going to be my range.
Then you've all used Blockbuster.
Yeah.
The only people who haven't used Blockbuster, even the 20-year-olds have used Blockbuster. Because they were 6 or 7 years old when it started to decline.
I guess they've gone in there with their parents.
They've been at Blockbuster. Yeah. We've all been at Blockbuster. We all lived at Blockbuster. The worst thing that happened to you on Friday night was you wanted to go get a movie and it was all out.
And they didn't have it, yeah.
And you didn't have it. You were like,
something else.
No, can you call another Blockbuster, see if they have it? They're like, pal, it's all out.
Yeah.
That was the worst thing ever.
That was.
Look at Adam Downton says never used it, 19.
There was somebody in here, Andrew Nelson. He said, wait a second. He said that he's been to that one in Oregon that you mentioned.
Oh, really?
Yeah, he said I've been to that Blockbuster in Bend, Oregon.
That's the last one. There were 3 in Alaska and 1 in Oregon in 2019. There were 4 left. Or it was 2018. There were 4 left.
Man.
And it's incredible.
It's wild.
It was literally, Blockbuster was awesome. It was incredible. Yeah, and by the way, I still see red boxes at grocery stores.
I still use them.
You do not.
Yeah, I use them.
Look at Timmy and Tony.
You don't use them?
No. You do use them.
I mean, if there's something on, if there's something on that I want to watch, I know that Redbox is going to have it. If Netflix doesn't have it or whatever. I
don't even know how I watch a DVD right now. Oh, my PlayStation.
Putting your, PlayStation. That's what I do.
I haven't rented a DVD in 3 or 4 years.
They have them at 7-Elevens.
They have them at the Giant Eagles.
You can get a Slurpee while you're at it. Yeah, Acme has one. I've been there.
The one on 18?
Yep. That's usually where I go.
Giant Eagles got them?
Yeah.
Yeah, interesting. How old's
The
Neil?
adult section is sweet. Yeah, that was they actually did mention that in the Blockbuster series, where you walked in and the chime went off because you're walking into the 18 and older room.
Nick Zubek is from Akron, Ohio.
Nice.
That's awesome. So anyhow, those are the 2 things I want to talk about. Anybody else want to talk about anything else?
No.
Since Seth is way better at establishing the mojo. So guys, like the thing, like our page. So for all you patrons out there, I've opened up the 8 Pillars software today, about an hour ago, to our Paul Super Short chat. In that time, our good friend Jay, we have a portfolio page. He entered this portfolio. That's his portfolio. Look at this. All 8 pillars are checked in his portfolio. I don't know why return on invested capital and book value growth is not there, but it's not there. But he does have all 8 checks, which is pretty awesome. He's got a really high return on assets, really high return on equity. But this thing is coming out. It's coming out April 15th, guys. We're getting signups every day, a lot of them. Sign up for our Patreon. You get so much in Patreon. You're going to see the value in it immensely. You get this Discord, amazing value in the Discord. The price is only going up. It's only $17 a month. That's 50 cents a day to be able to handle your entire financial future and learn more. You're going to get exclusive access to us. We do fireside chats. We do exclusive videos, etc. As we grow, it's only going to get better and better. Tim will be at the helm here soon. Tim is one of the best managers of businesses that I know. He runs Dynasty Owner, which is an incredible site.
There's a guy, I can't remember, I think his name is Andy. I think he's in my chat. He was kind of almost at that level of being ready to trade, day trade. He started day trading this week. On Monday, he made $950 day trading. Today, he messaged and he said he made $562 day trading. And all he's doing is just learning from what I'm teaching him to day trade. And I'm like, man, this is incredible.
Yeah, it's awesome. So either way, it's not just about, forget about it, it's $17 a month.
Yeah, it's not.
I mean, you pay $12 a month for Netflix.
Yeah.
Which provides immense satisfaction. But imagine all the things you're learning with our software. So let me pull up our software here.
Yeah,
it is pretty awesome.
When I was looking, I remember when it was $8 a month. We're talking. I mean, there's some cups of coffee at Starbucks that you can get up to $8 a month if you put enough espresso drinks on them.
Correct. So this is our site right now. We just finished the retirement calculator. It's on there. We're still testing it. 8 pillars on there. Real estate calculator, loan calculator. There'll also be the stock analyzer tool. That'll be on. I'll probably put that for the 8 pillars because I don't want to have too many things on this page. But over here to the right, it's momentum trading, which we're working on, and chart trading. These will be extras because of how much data we have to buy for them. The data feed is awesome. It's getting better. I'm getting data going back to 1987, a lot of things. I'm spending a lot of money on this thing, guys. I've got basically 3 full-time developers working on it right now. It's an incredible site. It's our passion project. This will be the future of everything money in the channel. We're going to focus everything around how you can live your financial life on one website. I want to get news feeds. That way you're literally only going to everythingmoney.com for everything financial related. I'm trying to make it its own market watch, white charts, everything Yahoo Finance, all things combined. So It's awesome. $17 a month, patreon.com/everythingmoney. You're crazy if you don't do it. Yeah. Literally crazy.
With Yahoo Finance's upgraded edition for $35 a month, you get everything that everybody else gets. Plus you get, I think it's 5 years of financials. That's it. You don't get any more other exclusive.
5 years of financials?
I think it is. You don't get any other exclusive material. I mean, even if we gave you 5 years of financials only and we don't, we're still giving you more than Yahoo, and they're charging $35 a month. So.
Biggest error was to raise Seth's wages. Money got to his beard, and now he doesn't feel like showing up. Most underrated.
Brachialis.
What's that?
It's a muscle right in here.
But who is that? Is that Jensen?
Somebody that loves me.
Is that Jensen?
No.
No, it's not. That's awkward. How much for the shower cams? Spicer. Shocker that Spicer was the one that said that.
Spicer, you can't afford them.
All right, so what's our first stock? We're gonna focus on FANG today, guys. FANG stocks today.
Do you want to go in order, or you want to do Apple
Let's do them in order.
All right, let's do Facebook.
Facebook, guys. Why does it say Microsoft? Facebook, there we go. Let's make this bigger.
Paul, do you have a Facebook?
I do have a Facebook, but I think I'm going to cancel it.
All right.
Only keep it for, I'm on Instagram though.
Nice.
Yeah. So anyways, guys, Facebook right here. Last night it finished at 290.82 cents. Oh, by the way, we'll be getting 15-minute delayed stocks here soon. This is end of day, but 15-minute delay has been signed up for. Just needs to be signed up. All right, Facebook, guys. This is a huge company. $830 billion market cap. That is ginormous. Revenue, $86 billion. Net income of 29. So first off, their PE, that's an X. It's 28 PE. Profit margin, insanely high, 33.9. Expected for businesses that revolve around a lot of software because the margin, once you build the software, the cost to maintain is a lot lower. I think Facebook, I heard once Facebook was doing like 10 billion in revenue on 3,000 employees or something crazy like that.
Yeah, I mean,
how many employees do they have? We can look that up.
yeah, we can look that up.
But it's an extremely efficient business, I would imagine. How many employees does Facebook have?
I guess the question is, can they keep it going?
58,000. Wow, that's a lot.
Man, that's a lot. Yeah.
That's a lot more than I thought.
Yeah.
Okay. No dividends. Their free cash flow last year was 23.6 billion, average 5 years of 18 billion. So it looks like it's trending up, which makes sense for a growing business. Look at this, guys. Return on invested capital, 13%. Return on assets, 20%. This is pretty solid. They're financially, I've always said about Facebook, I love them financially. You're going to see why as we go further and further, but so far we have 1x on PE and 1 check mark on profit margin. So let's go to the income statement. The last 4 years, look at the last 5 years. 26.9 billion to 84 billion. Jeez. Check mark there. Huge growth in revenue.
Huge.
Net income growth, 10 billion to 29 billion. Massive check mark. Shares outstanding, still a check, 2.88 to 2.85. It's still a check mark, but they did increase early on, and it makes sense. As you're growing, they're probably issuing more shares to get more acquisitions going for people to buy onto what they're doing, but now it's starting to stable off, and it is a check mark still. So far we've had all checks except for PE. Balance sheet, this is gonna be incredible. Cash on hand, $76 billion. Ready for this one, guys? Current liabilities, 15. Total liabilities, 31. This is the ultimate of all check marks. They have more cash on hand than all of their debt combined. Not just short-term debt, total debt. They could take their cash, pay off all their debt, and still have $44 billion left over.
Yeah.
That's an astronomical amount of money. So technically, you have to take it off their market cap, but their market cap's already so large anyhow, it's only decreasing by 5%, but it still is something. If the company was a lot lower priced, it'd make a very material difference in the value of the company. Mm-hmm. So let's go to the next one, cash flow. So as I tell you guys, the benefits of owning the Everything Money app, cash flow is cash from operations less capital expenditures. I've added this portion onto this is not actually part of the investing section, but it shows the free cash flow by year and the average. The 5-year average, 17.9. They went from 11.95 to 23.63. Now, guys, by the way, we got the acquisitions and dispositions on here too. But look at this. So we always say 20 times the 5-year free average cash flow. So the average is 18 billion times 20 equals $360 billion. So it's an X there, okay? Because the company is currently valued at 860 billion. So it's definitely an X. But this is growing a lot. So you have to decide to yourself, how much is this going to grow by in the future? Is this growth sustainable? Going from basically doubling in the last 5 years. Maybe? I doubt it. Look at the previous 5 years. 2 billion to 12 billion. It went up 6 times. That didn't sustain for the next 5 years. Yeah. So you have to sit there and realize it's probably not going to grow at the same rate. Will it still grow? I'm quite sure it'll still grow because Instagram is growing like crazy. They own Oculus. Facebook's trying to be like Google or Microsoft, things like that.
What assumption would you make for their growth rate?
I don't know, but the stock analyzer tool will allow you to make those assumptions in there, and it'll tell you a value in the future. I don't know. What would you think? Doubling in 5 years is about. Well, it's actually 4 years. It's actually because look, it's actually you go from 1, 2, 3, 4. So it's actually a 4-year growth doubling. That's 18. Call it 20% a year. I mean, to be conservative, cut it in half to 10%.
I think that's
still 10% is still a lot.
It's great, yeah.
It's still going to take $23.6 billion and put it into 35 or 36 billion. Yeah. But here's the deal: if it gets to 35 or 36 billion, and you want to pay, it's a very mature company, 12 or 15 times the previous year's free cash flow. What's 35 billion times 12? 420 billion. That's an X still. It's still selling for well above that. Mm-hmm. So it's selling for double the free cash flow 5 years from now, assuming 10% growth at a reasonable multiple. Remember, as a company gets bigger and bigger, they're not going to grow as much. It's harder to grow. So you'd want to pay a lower multiple to be able to get a good return on that on their investment. I'm going to tell, obviously, you know what I mean. The company's too expensive. The company's way too expensive. But let's do a recap of the 8 pillars right here. Oh, that's incorrect. Oh, there's an error here. This should be a check mark. I think I know why that happened. But either way, bug. Look at this, guys. All in all, it's basically the valuation metrics that are overpriced. The same way it is with Microsoft, the same way there's a lot of tech companies out there. They have great financials and just terrible valuation. Here's the good news, guys. Microsoft was the biggest company in the world in 2000. And in 2012, when I said it was an awesome buy, I was told how stupid I was for not understanding tech and how Microsoft was dead. And now look at that was when it was I started buying it at $21, $22 a share. And now it's at $200 and some a share. It's considered a Goliath again. These things will go in cycles. There will be a time when everybody says, nobody uses Facebook anymore. Very well could be the case. You should see it in their revenue growth and their profit growth then. That's the same thing I said about Microsoft. Nobody uses Microsoft anymore. Then why are their revenue and profit growing by 8 to 11% per year, year in, year out? That's the thing about value investing you have to understand. That you can't look at the stock price. You have to look at the financials and understand that.
The other concern I have about Facebook is all this antitrust stuff, of course. We need to figure out where that's going to end. But somebody said that Facebook tried to buy Snapchat and they failed. And I look at that saying, okay, they failed, but they just created their own Snapchat on Instagram, basically, with those story things that they do. So that's incredible. Of course, they own WhatsApp. That's huge, especially overseas, communicating with people overseas. So, yeah, Facebook's legit. That's for sure.
They do own WhatsApp, which Mo really hates.
I hate WhatsApp. It's the worst.
It's not the worst,
but
it's
the
okay.
Worst.
By the way, I've had a little bit of issues with my WhatsApp desktop version recently.
Oh.
I get like 18 texts from you and Matt, and then all of a sudden I go to the desktop version, it doesn't show any, and then I have to hit like.
That's funny. I don't have any problems with that on Signal.
Signal's the worst. If you log into Signal's desktop, it's like loading all your messages.
Never had issues. Or Matt could just go out and get an iPhone, and we can avoid all of this issue.
Well, Matt's just broke. Hit the like button, guys. We only have 81 likes and 293 people watching.
Yeah, hit the like button, please.
Quinn's got a comment. What do you think of companies' earnings being strictly I love it. And is ad revenue justified in your opinion? Yes, Ron. So here's the deal. We use Facebook advertising for our businesses, and we enjoy it. It's very difficult, but we do enjoy it a lot. Remember, as people use the internet more and more, the only way to get money off them is advertising, especially on free services. You either pay a monthly, like everythingmoney.com, you're going to pay a monthly fee. Guess how many ads you're going to see? 0. Why? Because you're paying me a monthly fee for it. By the way, another reason to join us versus Yahoo Finance. They're still going to show you ads even though they're charging you $35 a month. We are not. Dynasty Owner, same thing. But I do think ad revenue that's a sustainable business model long term because people are okay, especially as Facebook's analytics get better and better, you're going to get more and more ads that are directed at you for exactly what you want. I got one the other day for a mail order bride. They knew I was single. Did you know this? I sent it to the group chat. I sent it to the Quinn. Do you remember this? I sent it to the group chat. Oh no, you're not in our Instagram group chat.
I have a good one after this. Go ahead.
In our Instagram group chat, it got suggested for me. It was basically a mail order bride because it was like, hey, meet somebody abroad. I was like, wait a second. And I was like, I sent it to the group chat. What were you gonna say?
My dad was in town over the weekend, and he was asking me about this tonal thing. We've never spoken about tonal. I've never looked it up in my life. All of a sudden today, in the mail, in the real mail, I got a letter, an advertisement discount thing from Tonal. I was like, this is creepy. I've never looked up Tonal in my life. Yeah, it's weird, but hey, whatever.
We know you clicked on it. How much? I swear I didn't click on it. I laughed and sent it to my group chat going, guys, this is just suggested to me. I've never clicked on a mail order bride. I swear, I will admit to so many things. I've never, ever clicked on a mail order bride. However, if any of you guys have hot sisters no, I'm just kidding around.
Here's a good one. Dads with a Purpose says, would shorting FANGs be an option with tech getting hammered? As you know, Nick, I do not short. Very, very infrequently. Paul is short on the S&P, but he even says it. So the FANGs are typically in the NASDAQ, and NASDAQ right now, as we've seen, is getting whacked. So he said that he wishes he put some of his short on the NASDAQ instead of the
NASDAQ 100, yeah.
Fully on the S&P, but if you want to do that, go for it. But man, not for me. I don't have the stomach for it.
I would also like to make another announcement here. So one of the things we do in our Patreon is we have a chat for music. I would like to suggest a song because it's absolutely incredible. Go off the tangent here. Zach Abel Be Kind. Guys, I'm absolutely obsessed with this song. I literally heard the song at 11:15 or 11:20 this morning, which was 2 hours ago, and I've listened to it 15 times already.
I walked in the bathroom before the show, and Paul was in the stall.
I was in the stall to get a dump, and I still had the song playing on my phone. It's absolutely incredible. Zach Abel, Be Kind. Yep. It is amazing. Seth, you got to listen to this song. I think you like the song a lot. I think the song's incredible. I've already sent it to like 18 people. It's incredible. So anyhow, that's Facebook. I think there's a lot of potential for Facebook. I don't like Facebook anymore. I don't go on. I've literally thought about defriending everybody and just using it for advertising. But at the end of the day, there's still a lot of old people who like to complain about politics, so it's going to be around for a while. But I think as time goes on, I think it'd be very, very difficult to take. I think Facebook is smart enough to go change themselves as the world changes. They still go pay attention to their active users, but Instagram's incredible, guys. Instagram is growing like crazy. I love Instagram. I get ads, but not as many as you would think, I guess. I mean, there are a lot, but I love Instagram. I think it's wonderful.
Yeah. Somebody said to go watch The Social Dilemma. I know you didn't like it. I thought it was good.
Oh, that sucked.
It's everything that you know, but when you see it, it's like, well, damn. So have you watched it, Tim? Mm-hmm. Yeah, it's different. Let me redo the technicals real quick.
Do the technicals.
So this is their peak, and this was back in August, September of 2020. So that right there, 304.67, I mean, that's probably my top, and that's the top resistance point. So if you want to do something with this now, it's hard because we're getting up into that overbought area, but you can, if this thing does, I mean, if it keeps going a red line like that, and you get an engulfing candlestick and break over whatever high this is today, 1, 2, 3, 4, 5, 6, 7 days ago, 7 trading days ago. If you break over that, you could probably go ahead and go long on this, but this is one of those where it's kind of running out of steam up here. I do see that resistance at 304.67, like I said, so just be careful. This is one of these things that they lead markets. All of these FANGs lead markets. I think the FANGs are responsible for 45% of this climb that we've had in the market for the past 4 years or something. 45%. So,
and guess what, guys? When the market goes down,
these are the first things up. These are going to be the first things down and get hit really hard. Yeah. So
especially with overvaluation. Now the good news is
just be careful.
Now the good news is Facebook and Google have very, very similar financials. These are the ones you want to pick up if you believe in the business. Especially, I think Google is just on its own. But look at it this way. Look how hard it is to penetrate social media.
Yeah.
Google created Google Plus.
Gone.
Who uses Google Plus? Is it
Gone.
Google Plus? Is it Google Plus?
It was Google Plus, yeah.
Is that what it was?
Yeah, it was. I remember I had one because it came out and I was. Is
it still around?
No, they dissolved it, but it was years ago.
I mean, look how hard
they tried to make it exactly the same platform as Facebook. They had the Google Hangouts. They attached that to it, so it was that little pop-up thing in the corner you chatted on, and they couldn't take down Facebook. And think about. I mean, the amount of people that have a Gmail account. If you had a Gmail account, you automatically had a Google Plus account. It's not like you had to go out of your way to subscribe to it. And
it's still very hard to take over Facebook.
Yeah. Is Facebook a moat?
I mean, listen, I think a moat is one of those things we have to sit there and look at and
What's
say,
a moat first?
So a moat, guys, is what Warren Buffett always talks about. A moat being basically a business that has its own protection. Like it's got a moat around the house. It's like really hard to enter. Now, is it easy to create a social network? Absolutely. We basically created our own social network with Everything Money and with Dynasty Owner. But the question is, how easy would it be to get all those users who are very sticky to Facebook? Facebook does a great, by the way, the other reason I'll never get rid of Facebook, easy logins. Whenever I go to a website to log in, it goes, log in with Facebook. I click it immediately. I log in with Facebook immediately.
Oh, wow.
Yeah, I don't even, why waste my time creating a password? Just
I had no idea.
Log in with Facebook.
Apple started doing that.
Apple's good too.
Yeah.
Look at Apple. Do they have a social media?
No, they don't. But also, Apple just started that 6 to 12 months ago. I mean,
the whole logging in with Apple?
Yeah, logging with Apple.
Yeah, I just do it with Facebook. To me, it's just super easy. I click log in with Facebook. Dynasty Owner, don't we have that with Dynasty Owner?
Phone number.
Oh, phone number. It's even easier.
I love the phone number.
And yeah,
thing.
you can do that. Juan Acosta says they can do it with my Gmail account. You can. I don't use Gmail for email. I think Gmail is the ugliest email platform in the world. I think it's absolutely gross. But either way, I just look at Facebook. It has that moat of it's just too difficult to overtake them. And does that mean it's good? Listen, I'm the idiot who said 15 years ago, MySpace is too big. There's no way Facebook can take over them. And look how smart I am.
Look where we are, yeah.
Yeah, look where we are right now. MySpace is a music site now, isn't it? Isn't Justin Timberlake on part of MySpace?
They're still, I didn't know they were still around.
Yeah, I think so.
Wow.
Let's go to MySpace right now.
I want to see if Tom is still on there.
MySpace.com. Look, MySpace. It's all about music.
Oh, wow. That's cool.
I think Justin Timberlake's a partner here.
Wasn't he a Napster too?
No, that was the movie.
Oh, that was the movie?
For,
okay.
Social,
Okay.
What's it called? Social Network.
That was a good movie.
That was a good movie. I liked it a lot.
That one's on Netflix now or Amazon or something. But I haven't watched it. It takes like 3 hours to watch.
No way. Did he really?
Isn't it like a 3-hour movie?
No, I don't think so. Did Neil really meet his wife on MySpace? Please tell me that's true. I hope he's not messing with us. Exactly, guns. I was in middle school when I used MySpace. So anyhow, I do think it'll be hard to overtake Facebook. Could it happen? Absolutely, but they've got themselves ingrained. I think they have 2 billion active monthly users across their platforms. 2 billion. The world is 7.5 billion people. They got 1 in every 3.75 people is actively on their one of their networks every single month. Guys, there's like 4 people in Africa who use Facebook, who even have they've got so much growth potential still just from the developing world. I just feel like Facebook's going to continue. It's just like Microsoft. Everybody uses Windows, everybody uses Office, everybody uses Word, all these things. It's just so hard to take them over. Even Google has tried with Google Sheets, and it's gone well. Google Drive, it's gone well, but it's still not replacing Microsoft Office.
Even Apple has they give you it for free with their products. Yeah, but the point is that people go out and just don't use it and go out and use Apple's or Microsoft's Office. Perfect. Because it is great.
All right, let's do this. What's the next stock?
Let's look at Apple.
Apple?
I'd rather look at Apple than Amazon.
Apple? More like, what the heck? Did I lose it?
I can't wait for Apple to come out with this new iPad. I've been bothering you with that for
What's up, Timo?
The last couple weeks. If anybody knows when Apple is going to come out with this next iPad, I know they announced the WWDC that's going to start on June 7th through 11th, but I want the iPad sooner. And I heard that they were going to announce it in March and come out with it in April, but I don't know if that's true. The iPad Pro, I don't want another one. I just want the big iPad Pro.
All right, guys, Apple. $2 trillion company. Over almost 2.5 times the size of Facebook in terms of market cap. Revenue, almost $300 billion. PE, 32x. Profit margin, 22, check mark. So with a lot of hardware businesses, they have some software, but they got a lot of hardware. The margins are lower. It's not like software where the gross margin is really, even if you look at their gross margin here, it's 39%. And that's a mixture of hardware and software. So there is, but still, it's a very good profit margin. I'm cool with it. We have a very adorable dividend, 0.67%, pays out $13.7 billion last year. Last year's free cash flow was $80 billion last year. And the average in the last 5 years was $66 billion. Look at this return on assets and return on invested capital. Guys, this is why Warren Buffett's Berkshire Hathaway loves Apple. They reinvest their capital and make so much money off of it. This is likely to be the combination of return on assets and return on invested capital is likely to be one or both of our next pillars when we eliminate the first two, but they're very, very high. That's why the Berkshire Hathaway group loves it, because they're buying for the long term and they want companies that can reinvest their capital at really high rates of return, okay? So one thing to keep in mind, 5 years ago, somebody I knew who was Apple's biggest golden child, loved Apple, Apple's fanboy, said, Paul, what do you think of Apple from a fundamental standpoint? I go, it's absolutely incredible if you believe the revenue growth is sustainable, which I said I didn't know if I did. Let's see how right I was. 5 years ago, their revenue was $235 billion. Today it's $295. So it didn't grow like it did the previous 5 years, as we see. Went from 128 to 235, but it still grew enough. Get a check mark. Again, Apple's so big, it's going to be very, very difficult to sustain high rates of growth. What's so funny, Mo?
Somebody wrote in here, where's the other guy that looks like a goat? Seth. Oh, I don't know why he looks like a goat, but that was a really funny comment. What the hell? Sorry, Paul.
That's okay. Net income, 54 billion, 65, 45 billion, 64 billion. Check mark there. Okay. Number of shares outstanding. Look what they're doing here, guys. 21.2 to 16.95. Check mark there. So not only are they getting high returns on their capital, they're decreasing the share count. So as time goes on, they're taking their extra cash, which is very hard to reinvest, and buying back shares to make you a bigger owner of the company as time goes on. Because when they take shares away, you still own your one share, but now you own one share of less and less shares every year. So you're getting a bigger percentage of the company every single time they do that. Okay? So on companies that you might argue are reasonably valued or low undervalued, this is a good thing. Apple's got a little bit high valuation, but their return on invested capital is very, very high, which means they're going to be able to drive a lot more free cash flow as the years go on. So far we have all checks but PE, correct?
Yep.
Balance sheet, current assets, $154 billion versus current liabilities of 132. Check mark there. Cash flow, again, guys.
This is going to be incredible.
Let's look at their free cash flow.
Do you remember at one point they had more cash than the federal government?
Yes. So obscure year, 70 billion in free cash flow 5 years ago. Oh, wait, what's going on here? What happened here? Oh, we found a bug. We found a bug. Mo, can you write me an email?
Yep.
Look at this. We have free cash flow. We have this date. Go to the Apple free cash flow statement. Tell them the dates are wrong. Why is it maybe they changed their fiscal year. I don't know, but we'll have to figure it out. But it's showing here 70 billion versus 80 billion. Check mark there. I don't think that's accurate, but it still is a check mark, I guarantee. So still a check mark there. Their average is 66 billion. 66 times 20 is 1.32 trillion. That's an X because they're currently at $2.06 trillion. So they're currently need to drop by about 35 or 40%, 35% to be reasonably worth it from that perspective. However, guys, that multiple is based on what you think is going to happen. When you have a high return on invested capital, that means the more they invest back in the company, the bigger they're going to make their jumps in income. With a high return on invested capital, they can get a lot more profit as time goes on their free cash flow. So keep that in mind. You might be willing to pay a higher multiple for Apple than the 20 times over the last 5 years. You might be willing to pay because, yeah, that's pretty real. I mean, you know what I mean? It's like, okay, they're selling for 25 times free cash flow of last year, but they're really able to drive a lot of profit. So if you think they have a lot more growth potential, even 30, 40% over the next 4 or 5 years total, it might be worth it. I don't know exactly. Do you want to look at the charts?
Yeah, sure. This is something that the Bid and Ask Nation has been going crazy for. And the reason is, this is a dog stock. So what dog stocks are stocks that go through the sweet spot, down, obviously, and then they just coast on the bottom and go sideways for a very long time. While they're going sideways, the price just keeps dropping on us, and you're seeing that in Apple. Now, this is a good opportunity because once this red line on our stochastic just starts moving up over time and crosses over this 32% area, we'll be the first ones in there to grab it. So this is, I have told everybody we've had a tracker share on it for 2 weeks. And this could last months. I don't know. That's the point of a tracker share. Throw up $120 and you have potential to make a lot more money once this thing crosses through because you will grab it right around 32% and ride it the whole way up. And I'm willing to bet that when you get up to this overbought area, Apple goes sideways for a long time. And as the stochastic goes sideways, the stock price climbs like that, just like it's doing to the downside right now. So Apple is going to eventually be something good for you if you are very patient with it. You have to be patient with it.
One comment, somebody made a comment like a lot of bugs. Guys, we're gonna always have bugs. Every time you update your phone, you know what's being fixed? Bugs. This software doesn't come out for another 2 weeks. The more and more users that use the software, the more and more bugs we will find. There will always be bugs because guess what happens? When you fix one bug, it creates other bugs sometimes. If we fix 20 bugs, it might create 2 or 3 new bugs because it's such a complicated website that works together in so many ways. You don't know the things you're changing here are going to change here. If you want perfect software, don't use any software because every software you use has bugs. The difference is when you use Microsoft Word, you've had hundreds and hundreds of thousands of people who've already used it before it gets launched. And then after that, millions of people use it every day and report bugs, and the computer reports bugs for you. This is not too many bugs. It still does exactly what it's supposed to do. It might be a little, that's why I want you guys to learn so you can spot these things and say, wait, this isn't correct. But there will always be bugs. I will never ever say there won't be. And I will never ever say they're ever gonna be fixed. So if you don't like bugs, you should not buy the software because there will always be bugs, especially with how many more things I want to add to the software as time goes on. I'm making the software better and better and better every quarter, every year. And as we add more and more things, what's going to be created?
Bugs.
More and more bugs.
If you don't like bugs, you shouldn't buy any software,
That's right.
Period.
Yeah, exactly. That's exactly it. So I apologize, but that's the way it is. Anyhow. All right, bugs are everywhere. Paul is always right. Who the heck is trolling us?
I don't know, but I like it.
Oh, Jeremy. Join. Anyways. Okay, so what's next? Apple, Amazon.
Amazon.
Oh, my arch nemesis.
Amazon. We finally, well, in my neighborhood that will stay in Paul's not neighborhood after a couple months, but we finally started getting same-day shipping, and I am so excited about it. I ordered 5 items the other day. I got 4 of them delivered by 9 p.m. It was amazing. I was so excited.
Benjamin made a great point. Benjamin just said, I love their dividend, even though it's adorable. I love their return. All these things, I'm still going to hold them for a long. I don't blame you. I think it's a great stock. If you've owned it for a while, I don't think you sell it just because I think it's overvalued. I just think it's one of those that you ride out for a very, very long time. Yeah. I just think it's going to be those companies that they're ingratiating themselves in everybody's lives. Like we're buying Sonos, right? If Apple had their own speaker system, I'd buy the Apple one. Why? Because I already have. Now, granted, Sonos does a great job of putting itself in the Apple software, and all their software goes into it. Like I have Apple Music. I used to have Spotify. Now I have Apple Music. Mm-hmm. Why? Because I wanted to have everything in one place. And I wanted Apple. What's it called that I have?
Apple One Premium.
Apple One
They've
Premium.
done a great job of creating that ecosystem. I mean, between watch, iPad, computer. That's why I switched off. I got a Samsung phone for 6 weeks, 8 years ago. And I was like, yeah, I can't do this. It just breaks. It destroys everything.
Dustin Johnson asked, how does trading work on Apple if it's in your long term? They're very different things, Dustin. Remember, when you trade, you can trade something and have it part of your long term and just keep it separate piles. I do the same thing all the time. It's a matter of how you keep it all together. That's what you have to worry about.
I mean, look at Walmart. I did a video on Walmart this morning. I'm assuming that Walmart is overpriced. I don't care. I've never looked at financials of Walmart. Well, not recently, especially not for this trade that I'm about to make. So it just doesn't matter. You have to be able to separate the two, completely separate the two.
Oh, I didn't know that. They have Apple speaker HomePods, connect them like Sonos?
Oh yeah, I have those.
Oh, thanks for telling me that, you dick.
I just forgot about it. because
I already ordered all these Sonos products.
No, you don't want them. Sonos is way better.
Oh, is it?
Yeah. No, you don't want these things.
I just hired my movie theater guy, my speaker guy to do my new house.
If it was me and I was buying
a bunch of Sonos.
If I was buying speakers for my house, I would be buying Sonos all day, not Apple.
Okay, gotcha.
Yeah.
Gotcha. I'm like, okay. All right, great. So let's do Amazon. So guys, Amazon is the only company so far I have said I was wrong on, and here's why. I was wrong on Amazon, not because of the stock price went. I shorted Amazon at $300 a share. It's at $3,000 now. I thought it was worth $50 a share when I shorted it, okay? I got out a long time ago, sub 1,000. But now it's at $3,000 a share. And the reason I'm wrong is I think it's worth between $500 and $800 a share. I believe last time I looked at it like 6 months ago. That's why I'm wrong. I shorted at 300 and I didn't realize that the company could go up so high and take so long before it fell that the value would more than make up for it. More than make up for it. So that's why I was wrong. I wasn't wrong because Amazon, when I shorted it, wasn't making money, didn't have free cash flow. It was terrible. And if you look at it now, it's still not doing that great when we look at the numbers here in terms of margin and all that stuff. So, Amazon, $1.5 trillion company, revenue of $386 billion, net income of 21, PE of 72, that's an X. Profit margin of 5.53, that's an X. Now keep in mind, guys, that's 5.53, and their biggest moneymaker right now is Amazon Web Services, which is server space, which has like 80% margin in it. And they're still only able to make 5.53%. So they basically use their other businesses the same way Apple does, except Apple makes money off of it. They want you to go to Amazon for everything, which, by the way, that's what I do. I just told my contractor today, guys, we need to build a box outside my new house so that Amazon can deliver stuff in there and not have to worry about it being dropped off and all that stuff. So I'm ingratiated fully in the Amazon life and culture. It doesn't mean I don't think the stock is overpriced, right? They're doing a great job of saying, hey, use us for everything you buy, and you'll use us for the other stuff too. That's what they're trying to do to make money. So far, 2 X's. 2 X's so far. Return on assets, not even that good, 8%. I don't know why we don't have a return on invested capital, but that's something there. No dividend. Free cash flow, last year, 26 billion, last 5 years, 17. So it's definitely on the uptrend right there. Income, I guarantee this is a check. Income, 136, 386. Jesus Christ, check mark there. Yeah. I would have never thought that. Net income, 2.37 to 21.3. Guys, look, the first 5 years of the decade, made money, barely, lost money. Made money, barely, lost money. Made money, I mean, they were making like nothing. They were making like 1 or 2% when they did make money. But it's still a check mark here. Their profit has now gone up almost 10 times in the last 5 years. Shares outstanding, 477 to 500. So that's an X there. There's our shares outstanding are increasing. Balance sheet, cash on hand, 132 billion. Total liability, current liabilities, 126 billion. So check mark there. Free cash flow. Yeah, this is a bug. It's a bug on our site because it's the same thing as here. Same thing here. So free cash flow, 14.3 to 25.93 check mark with an average of 17. 17 times 20 is $340 billion. Guys, this thing is astronomically overpriced. Even if you think that their growth potential is 20% a year for the next 5 years, I just have a hard time seeing how you justify that kind of price. Even in the last year of 26 billion, they're currently a $1.5 trillion company divided by 26 billion. What is that? 70 times, 60 times. 60 times free cash flow over the last 1 year, just in the last 1 year. It's just way too expensive. Is it a great company? Absolutely. Are their profit and cash flow increasing? Absolutely. Is it going to go up a ton? Maybe, it probably will, but the question is, will it go up enough to justify the current valuation? And by the way, guys, when it goes up a ton to justify the current valuation, the stock should go nowhere then just to justify today. Yeah. So if you think they need to have 50 billion in free cash flow to justify today, when it goes from 25 to 50, the stock should stay the same then, because you're just justifying today's price. That's the thing about momentum. That's the thing about hype investing that people don't get. When you pay for future growth, when it hits that, if you pay too much for that future growth, when it finally hits that future growth level, you shouldn't make any money because it's already worth. That's like sitting there saying, I think my house will be worth $1 million. My house is currently selling for $200,000. It'll be worth $1 million in 30 years. Let me go pay $1 million for it right now. And in 30 years, it's worth $1 million. Great, it's still worth $1 million. You're overpaying. You're paying for futures value today. You can do that, but you have to sit there and be underpay for the future growth. Pay a reasonable price for the future growth. That's all I'm sitting there saying. So, the recap on Amazon. Yeah, this is all accurate. So, 4 checks, 4 X's.
576,000 employees.
Yeah, they're huge.
Isn't that nuts?
By the way, how awesome is it though? I see Amazon buses everywhere.
Everywhere.
Those 4 transits or whatever they're called.
They're starting to come out with these like cars that just drive themselves and they stop right in front of you and you pick it up in the middle of your city. It's incredible. But from a technical standpoint, I actually haven't looked at this one before just because of the price and the affordability of it. But we're getting down into this area and it's just kind of going sideways. It's not under 32%. Because you can see, so when I break above 32%, my candlesticks turn green. And I like that because I can show you guys from a distance. But if this red line starts turning up like that, and we start getting some engulfing candles, I mean, you can do fractional shares of Amazon. This might be something that we do in the Bid and Ask Nation. I'm gonna keep an eye on this one. So those of you that are in there, put it in the Discord, just so we remember. But this could be something, especially with your fractional shares. This might be affordable for everyone.
Well, yeah, from a trading standpoint, from a value standpoint, I don't think so.
And guys, separate trading from somebody asked me, what did I see in Amgen yesterday? Because I bought Amgen yesterday from a charting perspective. Somebody was like, what did you see in the pipeline, this and that? I don't care. It doesn't matter what it is to me. To me, I look at a company, I block out price, get rid of all that. Don't care about that. I don't care about what the company is. All I care about is my trend. When do I add on an engulfing candlestick and my bid and ask difference? That's it. I don't need anything else. So that's what separates trading from value investing. That's so funny. Jay Wang said, I need to sell my car to put a tracker share on Amazon. Yeah, that would be true. Hey, Jonathan Montgomery, great question. Do you want to put that question up, Quinn, that Jonathan Montgomery just put up?
Okay. Do value investors use charting and momentum to find good entry points? Great question. I don't know. I don't personally. I'm sure there are we've talked about this before. I'm sure Warren Buffett, I'm sure every single value investor has traders in-house that say, listen, this is happening, maybe be patient, buy some right now, but be ready, because if something happens and it drops, it could go, this next support level, wait till it hits there. So I'm sure they do. I haven't added that yet to my repertoire, but I hope in the future to do so, but I'm still 39. I got time.
I've used it to do sell puts and calls before. It's not, I don't do it on everything, but if I do want to sell a call and I want to keep the shares, I'll maybe I'll sell calls right above resistance point or moving average or something like that. So.
All right, let's go to Netflix. Netflix, more like, okay. I hope is Matt Jensen in the chat?
Yeah, he is.
So Matt knows exactly what I'm talking about. Netflix, more like, please tell me he laughed. Come on, Matt. Do a little laugh for me. Crickets, exactly. Seth has got crickets. I do these jokes for just Mo, Matt, and I. Okay, so Netflix, market cap $230 billion, revenue of 25, PE 82, X, profit margin 11%, check mark there. So they spent a lot of money on their material. So here's the deal, guys. Average in the last 5 years, free cash flow is negative. So the price of free cash flow is already going to be an X because you can't divide by a negative number. But the free cash from last year is $2 billion. Okay, no dividend. Return on invested capital. This is kind of weak. 4% and return on assets is 7.36. That's kind of weak if you ask me, but whatever. So far, an X for PE, a check for profit margin, and an X for 5-year free cash flow growth. Sorry, 5-year free cash, the 20 times free cash flow is an X. The growth is probably a check, but we'll look at it later. Income statement.
Matt said he laughs at your joke pretty hard.
Oh, good. I'm glad to hear that. 8.83 to $25 billion. Check mark there. And I guarantee 2020 was a huge, they went up 25% in 2020 alone. Profit, look at this, guys. 186 million to 2.76 billion, check mark. By the way, I think Reed Hastings, their CEO, is an absolute douchebag who just loves to hear himself talk. He's an absolute tool. He talks about how amazing he is at everything he does. He's a tool, but it's a great service. Shares outstanding, X here as well, 429 million to 442 million, X as well. So far we have an X on PE, we have an X on shares outstanding, and we're going to soon have an X for the free cash flow times 20, average of the last 5 years, etc. Cash on hand, 9.76 billion, current liabilities, 7.8, check mark there. Free cash flow growth. Well, this one's right though. Why is this? This one's correct. All right, free cash flow growth. Negative 1.7 billion to a positive 1.93 billion. Guys, look at this. They just started having free cash flow positive last year. Look at all these years of negative. Now, I will give them, that last one was a positive. I guarantee, so in capital expenditures, guys, there's two capital expenditures. There's maintenance capital expenditures and growth capital expenditures. When I say maintenance, I don't literally mean, fixing a wall. What I mean is ongoing costs, capital expenditures they need in order to operate their business. There might be capital expenditures that are growth capital expenditures, things like building more warehouses to get more sales in, to get more inventory in, things like that. I guarantee that a lot of their capital expenditures were growth capital expenditures here. The question is, did they split that out in their 10K? Most companies do not do that. Vast majority do not do that, but that is important to understand. And even if you don't see it in their 10K, it's a good question for investor relations when you ask them, guys, how much of this capital expenditure was X, was Y, whatever it was. How much of it was growth? How much was maintenance? They should be able to provide that answer for you. So you can understand really what they're spending on. Even last year, even though they had positive free cash flow, you still want to understand how much this number was, I'm sure buying new media or making new shows, things like that, they might capitalize along the way. So, and again, their average free cash flow was negative over the last 5 years. So we can't really have a multiple of a negative. We can, but negative 1.54 times 20 is a negative $31 billion. We can't, that's not possible. So it's still an X because you need a positive number. So Netflix is a tough one. because I just don't believe it's got. Yeah, I think it's just hard to. Again, this is one of those companies that I think is going to be around for a long time. But remember, first off, everybody has a streaming channel now.
That's the thing.
Everyone has streaming now. I mean, Disney just announced 100 million people they beat.
Apple has their studio. They just said that they're coming out with all new content, documentaries and stuff, partnering up with all these Earth places that want to go in the ocean and the space and all that. Everybody has one. I mean, this Peacock thing, this came out of nowhere. They're great. They got The Office now. Yellowstone, Suits. So Suits is a bomb show, by the way.
Arturo and Marco, thank you very much for signing up for our Patreon. You guys just did it in the last 2 minutes.
Oh, nice. Marco came in. Good.
What was that?
Marco's cool. I like him.
Marco?
Yeah.
How do you know him?
I don't know. He always makes good comments in the chat.
In this chat?
Yeah.
Obviously, because he's not in the Patreon. The Discord channel is awesome, guys. So, that was Netflix. We have one more to do.
Let me go technical.
Oh, yeah, go technical.
So, I talk about the gaps that need to be filled. This was a gap back in October, and this is a gap that happened in January. So you can see that even though the stock price gapped down, and this is an overnight movement, so market closes here, opens here the next morning, and you get that gap down, that big black space in there. So I always say the gaps almost always fill in, and they have. So your stock price moved back up. With this one, stock price gapped up, and it came back down. So just remember, when you see gaps on a chart, just know that there's a high likelihood that those gaps are going to fill. It might take time, but it's going to happen. What we can do with it. I mean, we're getting into this oversold area. This is another one. I know it's an expensive stock, but it's a popular one for your fractional shares if you want. If it's going sideways, if you really want to do something with this, you can put a tracker share on it. I personally wouldn't right now. I just let it go over time. And eventually Netflix is going to turn up. It's just a matter of time. Keep an eye on it. This is a good watch list one. Maybe don't put a tracker share on it. Don't sell your car this time.
Bailey told me he also signed up. I haven't gotten the email yet, but thank you very much, Bailey, for signing up for our Patreon. Much appreciated. It's going to be one of the best financial decisions you make for the rest of your life. All right, Google?
Yeah, let's do Google.
Should we go to the GOOG?
I love Google.
So do I. So guys, you want to hear a great story about how a terrible investor I am? I was offered Google shares on the IPO because my money was at the bank who took them public. And I said no because they were overpriced. And they were at $60 a share. They're now at $2,055. And that was 14 years ago, 15 years ago, whatever it was. So nice job, Paul. This is one of those companies that just kept going straight up. But their fundamentals became just a lot better. A lot better. And again, I'm going to miss out on those opportunities. But all the other IPOs I was offered back in those days are like, yeah, I don't even know any of them. That's the only story I know of when I said no to that I regret. And I'm sure I'd have made more money overall, but I don't like having one company make me all of my money, but still overall I'm down in the entire portfolio. So either way, $1.4 trillion market cap, 182 billion in revenue, basically all ad revenue, 35 PE, X, 22% profit margin, check mark. Free cash flow over the last 5 years, about 30 billion, 43 in the last year. That's awesome. So return on invested capital, 10.4%. Return on assets, 13.76. I want to see about 12% return on invested capital. It's over a 5-year period. Over a 1-year period, you want 15%, but this is a 5-year return on invested capital, so not bad. Not great, not bad, but I think Google, you'll see how much I like the financials of Google. The GOOG. Okay, operating revenue. 92 billion, 182 billion. Basically doubled, check mark there. Net income, 19.5, 40.2. Check mark there, also doubled. So that's pretty awesome. Shares outstanding, 689 million, down to 675. Check mark there. So they've been buying back their shares, not a ton, but they've been buying about 2.5% of their shares in the last 5 years total. Balance sheet, $175 billion in cash and 56 billion in current liabilities and 97 billion total. So if you bought the company today, you'd have basically $80 billion in extra cash lying around after paying off all of its debt. That's incredible. It is the mother of all check marks. Total current assets are greater than all liabilities completely. Total liabilities, it is insanely awesome. Free cash flow. So free cash flow the last 5 years, 27.59 to 42.8, check mark with the average of 30. 30 times 20 is $600 billion. So we took 30 billion, which is the average free cash flow the last 5 years, and multiplied it by a multiple of 20. Because as free cash flow increases, you want to give extra value to the later years than the earlier years as an average. Oh, yeah, 30. There you go. $600 billion. The company's currently at 1.5. Overpriced. I've always said I like Google around $1,000, $900 to $1,000. I've been saying that for the last 6-7 months. It's going to take a while. It'll happen eventually. Eventually, it'll happen. I'll be able to buy the company at a good price.
Guys, Google was $1,013 on March 23rd. So it can happen.
Yes, it can. And granted, it was a big fall then.
Of course it was.
But I think that big fall will happen again.
That was the biggest thing that I took away from that massive fall is that it can happen.
Yeah, because these guys didn't believe that before. My brother and Mo were like, I don't know if it can happen. We had the fastest bear market to the fastest bull market in history. Whatever excuse you want to give for why it happens, it will happen again. I don't know what the reason will be, but it'll happen again. And just like we don't know why stocks go up sometimes, we don't know why they're going to fall sometimes. There'll be a reason it'll fall. We'll all be happy. This is the 8-pillar chart. All easy for you on the 8 Pillars website. Just shows it to you right here. I love these companies that have the X's only on this because all you have to do is be patient. All you do here is be patient because everything else is great. I love Google. We don't even... Name me another search engine you use. I'll wait.
DuckDuckGo.
I mean, Bing.
DuckDuckGo. I think DuckDuckGo is from Apple. It's terrible. Bing. Is that that's a Microsoft one, right?
Yeah, it's a Microsoft one.
Yeah, terrible.
There was, I think it was like 12 years ago, Bing would search Google to provide its results. Like if you type something into Bing, it was searching. Google thought this, and they put like some fake website that was only searchable through their Google search, and it popped up when they went on Bing to prove that Bing was using Google instead of just like. I heard that. I don't know if it's true or not.
It's wild.
It was pretty awesome.
Look at this. Look at this zoomed out. This was the low that I just said, 113, and here we are. I mean, they've gone up. They've doubled in price over the past year. This is nuts.
I like Bing, by the way.
I've never used it.
I don't dislike Bing.
I tried to use DuckDuckGo, and it was awful. It was just terrible. But whatever. Good job, Google. You win. But yeah, from a technical side, I don't know. I don't even know what to tell you about this. I mean, look at that climb. It just keeps going higher and higher. Right now, you can't really do anything with it. You're kind of just in limbo right here. If you have it, congrats. I would hold it. This is, I don't know. I mean, I don't have anything for you. I don't know what to tell you on Google. Have fun.
All right, guys, those are the FANG stocks. Took us exactly 1 hour to get through the FANG stocks. So we just open ourselves up to hitting the like button. Let's all, as Seth would say, fondle that like button. Is there Let's all hit that like button. We only have 167 likes on 338 people.
You want to do another stock, or do you want to do Q&A?
Let's do a Q&A.
Okay, sounds good. Question us, please.
Question us. Hey, Seth, can you help us out with the questions? Like, pick which ones we're going to use.
Ooh, Viacom. That big fall in Viacom. So if you guys don't know, what happened with Viacom and Discovery was there was a big hedge fund that got called on margin last Friday, $30 billion. And they went and they liquidated a lot of positions. And they owned a big share of Viacom and Discovery. So that's why those things tanked so badly. I tried to go in there and sell puts on Discovery today.
They didn't get
filled. Sad.
They get filled.
Yeah. They were good returns too. 12 to 16%, but I didn't get them. But we're getting there. I mean, but that was the reason for those big falls on Viacom and.
Uh-oh, an article just came out 1 minute ago.
Uh-oh.
Tesla's first quarter sales likely hampered by chip and parts shortages.
Everybody's talking about this chip shortage stuff.
By the way, I'm even more bullish on Intel than I was before. I'm even more bullish now than I was on Intel before. I know everybody, the chips. Yeah. I just think that they're building 2 new plants in Arizona or New Mexico or something like that to build chips. They have a new CEO. I like it a lot. I feel like they've lost some business lately, but I think they're going to really make up for it with chip shortage and being able to get some market share that way. What is Intel even at right now?
I think it's like $63 or something. People keep asking for a lesson on options. I mean, we've done them before. There's videos out there on options. I mean, I'm thinking, I don't know, maybe we should do a Patreon only stream like you did for real estate and I did for charts, and just make it for you guys and you can do Q&A. I know that the people that are in the Patreon, I think that you guys benefited greatly from my stream on Friday, Paul's real estate stream a couple weeks ago. So I think that we should probably do something like that. And now is a good time to learn options, because not that you could do anything, but when the time comes, you'll be ready to go at it. So that's a good idea, whoever said that. Can you explain, well, where'd that go? These things move quick. Can you explain the technical board? I never understand what non-Paul guys are doing. I don't really know what that question means.
Non-Paul guys?
Yeah.
What?
I don't know. Qualcomm, from my perspective, we put a tracker share on it. It's doing the exact same thing as Apple, just coasting along the bottom, and we'll buy it when it pops up.
But guys, let's look at Intel real quick. 8 pillars, all checks. PE of 12, price to free cash flow 17.7 over the last whatever years. Guys, look at the return on invested capital. Over the 12% I like, and the return on assets is 14%. This is pretty solid. It's only selling for 12 times profit, which means, I don't know, it's just like their free cash flow last year was 21 billion and the company's at 264. They can absorb, I was buying the company sub 45, sorry. Now it's at 64.50 as of yesterday, as of last night. I still thought back then it was a $70 to $80 stock. I still believe that. There's not as much margin in it anymore for me, so I'm not buying it at $64. But I'm looking at saying these are the kind of companies that when they fall, you want to pay attention to and make sure that you're not bringing your own bias into. Everybody says Intel is dead. And they did lose some business last year, but my understanding is the business they lost made about 5 or 7% of their entire revenue. So what did they lose? Look at their revenue last year. $78 billion. 5 years ago, 59.4. I mean, if this company's dying, where's the death? I don't know. This might be like Microsoft was years ago. Everybody's telling me, oh, it's Microsoft. They're so dead. Their age is... Okay, fine. Maybe they are. I just look at Intel. I was buying Intel at 45 and below. I lost the shares to a covered call at $57 or $60. And I'm happy with it because I looked at it saying it went to $60 really quick. But when the market falls again, and if Intel falls with it, I'll be buying more shares of Intel sub 45.
Yeah, we were buying them at 40, and I think we got some.
Did we?
I think our cost basis was 40.
Was it even at 40?
Maybe it was 42.
No, I don't think they got that low.
45 was our cost?
Yeah, I think it was like, I think I got them at 44, 45.
Okay. Yeah, that's
I mean, we literally got like the exact bottom, like almost. It was incredible.
Yeah.
And I lost them right here in this spike right here. This is exactly the spike I lost them.
Yeah.
Right here. It spiked up exactly at that point, and that's when I lost the shares. But I made a good buck.
Yeah.
I still think Intel's a good company long term.
Good company. Yeah. Guys, Seth just texted me. 1 o'clock tomorrow. Him and I are going to do a stream only on trading. So 1 o'clock tomorrow.
Oh, is that what's going on tomorrow?
Yeah, we're going to go live. I want to talk about Amgen real quick. So those who are in the Bid and Ask Nation with me, you guys know that I bought Amgen yesterday. I love that it's coming up through the sweet spot like this. This is Friday right here, this big green candle. I wanted to get a follow-through candlestick, and I did yesterday with a big green candlestick, and that was perfect. So I'm in Amgen, and today is exactly what I wanted. I wanted this little pullback that's happening because I wanted to create that, let me zoom out a little bit. I wanted to create this W formation. So we have a lower high here, a lower high, and when I talk about lower highs, go to the Trading 101 series, you'll see what I mean. So today, this is great. I'm getting a little pullback, and I'm hoping tomorrow or Thursday, I go like that. And I'm looking to get out of this thing, probably $260 a share or something, but the Bid and Ask Nation is trading this with me, and I think we're going to make some good money on this. We have a beautiful trend. Everything's working really well.
So Jason Phillips made a comment. He goes, he bought Intel and Cisco because of us. Remember, guys, I appreciate getting the credit for it. I don't want the credit yet. I want the credit 5 years from now when you guys say, boy, I used your guys' teaching to find my own stocks, and I bought stocks and I beat the market over a 5 or 7, 10, 20-year period. That's what I want. Because if the stocks were down, would I be taking the blame for that? Absolutely not. Just because you guys buy a stock and it goes down in 3 months doesn't mean that I'm to blame. I believe my methods of investing work over long periods of time. I know we all want instant gratification, but I'm telling you right now, that's not the way to go. I want you guys to stick with this, learn with us for a very long time, and you will get a better understanding of business and finance and money, and you'll make a lot more money as time goes on. It'll be small though. It'll be 3 or 4% a year. Little bits, 2 or 3% extra a year that you make over the market, and it won't feel like a lot, but when you wake up 30 years from now, you're gonna be like, oh my God, I crushed the market. That's what I want to thank you. I want to thank you when you're retiring at 60 instead of 72. I want to thank you when you're retiring at 55 instead of 70. I want to thank you when you're 80 years old, I'm dead, and you're giving your grandkids millions and millions of dollars that you wouldn't have had before because you learned a little bit today. It's not just about making money over 3 or 4 months. If you want to make money over 3 or 4 months, there's chart trading and there's momentum trading, and I will gladly take credit for those. But the problem with value investing is it takes a lot of patience and a lot of time. Jason, I still appreciate the thank you, and I'm hoping you're learning a lot from it. But the whole point is, if the stocks went down, I wouldn't have taken the blame. If you blamed me, I'd been like, no. And I want to make sure everybody realizes that, because I'm not the guy, like every other financial planning a-hole out there, who wants credit for everything that happens in the short run. It's not me. Oh, you look like you're going to say something, Mo.
I was going to say something.
Tim's over here like fist pumping in the air.
Tim's loving it. So somebody asked the question, do I add on pullbacks? And the answer is no. So we got a pullback today. What if this thing keeps pulling back? Say I buy it today at $251, and tomorrow it drops here, and tomorrow, the next day it drops here. This red line turns down like this. So I always say my big thing is buy high, sell higher. I'm not a buy low, sell high person. I buy high and sell higher. That's the reason why I waited for yesterday's candlestick, because it was higher than Friday's. The reason I do that is because these charts give me the highest probability of making money. It's not a guarantee, but I want to give myself the highest probability of making returns and not trying to get into something cheap and hope and pray that it moves up to a higher level, which is not going to work out for you in the long run if you do that.
Yeah, the thing about momentum trading, guys, is it's all about finding a trend and sticking with it. The trend is your friend. Now, with my momentum trading that I'm going to be doing, you're going to be wrong 65% of the time. It's going to end up losing money. But the 35% you're right is going to make a lot of money. That's why I like momentum trading. It takes patience, it takes diligence, and it's a way to make money in both up and down markets, because you can short and go long. So I will be doing that. That's part of our 8 pillars over here. That's part of our 8 pillar software. It'll be right here on the right side. Like I said, it'll probably be everybody in the Bid and Ask Nation and Pulse Super Shorts will be getting these 2 for free. If you want more, we'll figure out what it's going to cost, but it's going to be well worth it. But you should have some extra money to go do it with. It's not just anything for, Mo and I are going to do it for our own money. I love it. I'm excited about it. And it's actually currently being built right now. I'll show you right now.
Yeah, it's pretty awesome. I think I was looking at it on Saturday or Friday when I came to your office. It's incredible. It's just incredible.
So it's like it's doing it based off turtle trading. If you want, go to our link below for complete turtle traders on Amazon. That's what I'm using for our turtle trading for stocks. But it basically looks at high, low, close, creates these little TRs, buy, short, exit, and it's all these things you'll understand if you read the book, and it's going to give me my indications of I should buy or sell or short or exit a trade or anything like that. So what else we got?
Yes, Quinn? He's putting it up there. Let's see here. Hold on, we're on a delay. Keep holding.
Quinn,
it's
we're waiting.
Coming. He put it up. It's coming.
How to handle companies that invest heavily in research and development to sacrifice current profit like Amazon. You just got to understand that. You have to go understand the financials and say, okay, how much are they driving with this money? Like, are they able, what are they putting the money into that's going to make, it's all about estimations and assumptions. You don't exactly know, but you got to do more research and talk to the company's investor relations and say, hey, when you guys spent this, what's the expectation? You look at their return on invested capital. It'll show in the past how they made money on their invested capital. You'll be able to look at that, the return on assets. How do they make money off their assets? Those are the things you look at, and you'll be able to determine, okay, this is how this company is doing. Is it a foolproof plan? Guys, the future is not foolproof. If it was, nobody would have bought Blockbuster in 1996, right? Nobody bought Blockbuster ever, because they're like, oh, it's going to zero. That's the point. You have to understand that the thing about investing is making assumptions, buying a big basket of stocks based on a certain amount of assumptions, and you're probably going to be really, really right in a few, really, really wrong in a few, and a lot of them will do about what you thought. That's the point of it.
Somebody asked me about whole Sprouts Farmers Market, and I'm going to say to you, so you can see that this. I'm going to zoom in here. It might get a little bit ugly, but you can see that this red line is just barely, maybe starting to turn over. If this red line starts to roll down like that, you got to exit your position. So right now you're fine. This thing can just keep going higher like this each day. Just as soon as that red line drops under your 80% line and starts going down, that's when you take your profits. And you've had a great run on this thing. This is a stock that I think Spicer brought me a couple of months ago or a couple of weeks ago.
Can you put up Nuke It Now's comment? Nuke It Now. I want to talk about this.
Yeah. Did you have puts on them?
I don't know if I got the puts executed. Quinn, are you putting it up or no? Yeah. Okay, so Nuke It Now asks, I bought AutoZone a month ago. It's going to the moon right now. When's a good time to get out? I can take profit. I can't take profits off because the share price is so high. When is it? I don't know. Buying a stock without knowing when you're going to exit is like getting on the freeway having no idea where you're going to go. Why would you do that? I don't mean it to be a jerk, but if you don't have a system in place, whether it's from a fundamental side or a trading side, don't enter it. Go learn a system. Because when I have a system in place and I sell something, Intel's at 64 bucks. I got stopped out. I got covered on it on my covered call at 57. Guess how much I care? 0. I don't care. I stuck to my system. My system sometimes will work for me. I have other stocks where I got covered calls taken on me and the stock went lower. Do I go, yeah? No, I just go, okay, that's going to work sometimes. It's not going to work sometimes. When you have a system in place of when you're entering and exiting, you can never, ever do anything but just say, okay, I did a system. It's just like blackjack. Sometimes when you hit on 16, you're going to get a 5, right? You're going to get 21. But a lot of times you're going to bust. That's not the point. You stick to the system. You stick to basic strategy. And over millions and millions of hands, you're going to do better by sticking to basic strategy than worrying about your emotions of it. I don't mean it to attack Nuke It Now, which is a great name, by the way. I don't even know, like Nuke It Now. But you have to remember that you have to have a system in place for what you're trying to do. Mm-hmm. If you don't have a system, you're in the right spot. Join our Patreon. Go learn a system. There are systems for everything. Chart trading, momentum trading, fundamentals, everything. There are systems for everything. And when you stick to a system, you can sit there at ease going, I just do exactly what I'm told to do. I love that. I pull my emotions completely out of it and I don't think about anything. I just roll with it. Don't care what happens.
Somebody asked a question about 10Ks. When I read 10Ks personally, I go through the first part, which is the business model or whatever it is, and how the business is going. The risk factors is a big thing for me. A lot of them are generic. You're going to see them over and over and over. But the first, I don't know, 10 to 15, depending on it, you always want to look at the risk factors and see what they're doing. Obviously,
dude,
the
financials. Now he's calling me a schmuck. Somebody ban Nuke It Now. Tell me your system. Do you see this? He's calling me a schmuck. Well, that's why I'm asking you, you schmuck. Tell me your system. Guess how much?
It has to be Spicer.
It has to be something. All right, Nuke It Now. I'm not even answering you anymore. Congratulations.
Yeah. Good job. Way to go.
Like, come on. I'm here trying to help you here. Go learn a system that speaks to you. I've said this 1,000 times. Go learn a system that speaks to you. We offer chart trading, momentum trading soon, and fundamentals. 1 or 2 or 3 of those, all 3 will speak to you. Go learn it. I'm not here I can take you to water. I can't effing force you to drink. I'm not the schmuck. You're sitting in front of the water and you're choosing not to drink. I'm not the schmuck here. Moving on.
I think they spelled schmuck wrong.
Yeah, they did, but that's okay.
John, how many 10Ks have the same pages? We might lose money on COVID. Yeah, I mean, that's what I'm saying. When you go through the risk factors, it's going to be the same thing over and over and over. So, yeah, I mean, ignore those ones. Obviously, a company is going to be worried about losing money on COVID. Paul, any new watches lately?
It's okay, Obi. I know it's okay. I haven't bought any watches lately.
Not
the most recent one I bought was February.
No, the most recent one you bought, you gave to Mikey.
Oh yeah, I did buy a watch recently. I hated it. I gave it to my brother. I was gonna return it. What was I gonna do? No, I was gonna return it. I was gonna sell it.
You're gonna sell it.
By the way, everybody thinks I need to calm down. Well, yeah, but the thing is, like, I get that. I don't know this person though. It's not like if it was somebody I knew, they said, "Hey, schmuck," I'd be like, okay, like, Quinn, in our group chat, how offensive are we to each other?
Oh, what?
Offensive are we to each other in our group chat?
Not at all. Or,
he said not at all.
I thought you said how offended we are.
No, we're not at all offended. We just know we're here to bust each other's chops.
Yeah.
I'm sitting there saying, like, listen, I'm very big on that because so many people don't listen to go learn a system that you want to follow completely. That's the most important thing. I cannot stress this enough. Literally, I see people fail in investing when they start thinking about things, when they overthink things. If you look at my value investing versus a guy like Gary, who I respect a lot, I don't think as much as Gary does. And Gary does very well, don't get me wrong. He does extremely well, but my goal isn't to do that. My goal is to think, if most investors think this high, Gary thinks this low, I'm like right here. But the difference between this and this is a lot bigger in terms of return. And I will find that any system you pick, the closer you stick to the system, the better you'll do. If you deviate from the system, you're asking for trouble. That's it. You're asking for trouble,
is true.
right?
Yeah.
You have to stick to the system because they work over a long period of time. Somebody else mentioned, I heard turtle trading hasn't worked in this market. There's value investing. Have I given up on value investing?
Yeah.
I like the fact that it's not working. By the way, I don't know for sure if it's not working or not. Mo and I are going to back test this going back 10 years. I don't know if it's not working. One of the things we're going to do with the trend trading is then see how it's done over the last 10 years.
To me, it doesn't make sense to me that it won't work. I mean, all you're doing is buying, you're going to make money. The only way you're not going to work is if the market is just going sideways. If it's going up, you're going to make money with the moving averages.
But even then, though, I think you can still make money because
of course, but I mean,
you're finding trends. There's still trends in a sideways market. There's still a lot of stocks that can have trends to it.
Right, but this market has been like this.
And that, by the way, so when he's saying, and when he says it doesn't work, I think he means relative to the market. And you might be very well right, because lately the market's been on a tear for no apparent reason. And unless you're involved in the 4 or 5 stocks, the 5 FANG stocks that made the entire 45, then I don't think it's going to work. But I'm not looking for what worked in the last 3 or 4 years. I want what's going to work over a 20-year period.
The thing that I like about the momentum trading versus what I do, that's black box. I mean, you just do it. There's zero thinking.
It's literally going to send me an email every day. It's going to send me an email every day. Here are your 100 stocks. Paul, these 17 had buy signals. Go do it. The 14 that you currently have, say exit right now. I'm just going to do it every day. By the way, I got to work with Merrill and talk to them about doing these. I'm talking about maybe I put the money in Merrill and have them do it. Lapel? Oh no. The mic's not on.
Oh, you can't hear me? Yeah, your mic went off. Let's wrap up.
All right, let's wrap up, guys. It was a wonderful session. Mo's mic is done. Thanks very much, guys. Seth will be back next week. This Thursday, we still have a live stream, and tomorrow we at 1 o'clock. Mo's going to have a live stream, and we'll go from there. Thanks very much, guys.